EOH is the largest enterprise applications provider in South Africa and one of the top performing shares on the JSE in recent years. It has grown organically and through a number of acquisitions. It has a market cap of 3.5 billion rand, a price to earnings ratio of 15.4 and a dividend yield of 1.4%. Now looking at EOH, Paul, up about 75% thus far this year.
Yeah, it's been a real screamer, and a couple of things that are worth noting about them is they focus on the enterprises, in other words businesses. They own and hold agencies to represent people like IBM, Oracle, which does a lot of customer relationship management software for companies, and then also SAP, which is the big German company. You've heard no doubt of these SAP ERM systems where enterprise management, the entire business from the ordering through to the production management and the accounts can basically run on various SAP modules. So basically all companies, big manufacturing companies right through to municipalities and others, are looking for someone like EOH with the specialist skills to come in and, develop their business applications for them so that their staff can use computers to increase business efficiency. One of the best companies in this space, in that scale category of around 3 to 4 billion rand. It's received a lot of institutional attention from the market, and you can see it in the share price. The market absolutely loves this one.
Craig, Paul saying that EOH is one of the best in its category. What do you make of EOH?
Yeah, look, I mean, you really can't argue with their delivery in terms of headline earnings per share. The balance sheet's been bolstered nicely. But the factor that I have to mention, of course, is a lot of it's been by acquisitions, and that's been part of their strategy. They said half of growth would come organically and approximately half, and that figure's changed, maybe 40, 60 on occasion, would come from acquisitions. But a lot of the acquisitions, when I look at them, although they're not always disclosed in terms of the figures, but if you work backwards, you can see that they're paying multiples of 5 or 6 times earnings, and of course you start acquiring with paper at PEs of 15, 16, then it's obviously going to be earnings enhancing. Once those acquisitions are bedded down or the acquisitions start drying up, there's always that question mark in terms of will the growth come. If you look at the IT sector, that's always a bit of a concern. So I'm throwing some of the worries. The other worry is working capital. There's been a lot of pressure in terms of working capital. We often think of accounts receivable or debtors as a current asset, but in fact you've got to make sure that you collect that. So while you've seen growth of 60% on the top line, just to get an idea of trade receivables, they've gone up about 60% on the interim period. In the last finals about 50%. Your inventory's gone up 286% on the interims, over 300% on the finals. So and they've had working capital pressures over the last 2 years. So that's a little bit of a concern. We're probably going to see more than 100 million net outflow this particular year. And they've given a trading statement of guidance between 25 and 35%, which is a little bit lower than what they achieved in the first 6 months. So I'm wondering, are they starting to slow down? There were a lot of acquisitions those first 6 months. I'm not sure exactly what the figure will be for these next 6 months because they tend to disclose them after the fact. But it's quite interesting to see whether that acquisition path is sustainable.
Indeed, Paul. Craig talking about acquisitions. They've recently made that Siemens IT Solutions acquisitions and raised a lot of concerns. There's also another concern is the public sector work that they do with the government. Your thoughts on the number of concerns that Craig has raised right now?
Yeah, look, I think it's fair because, as he says, if you go on buying companies that are at a lower rating than yourself, then it looks good because you basically pay with the currency, which is the shares, but you are constantly able to reflect rising earnings. But, that earnings forecast looks like they're going to make somewhere in the region of R2.50 or something for the full year. So that's where the 15 price to earnings ratio comes from, with the share price around about 36 Rand. But they're very good. The CEO, Asher Bobot, appears to be very good at buying companies. He doesn't buy things that are too big, because that always brings with it trouble, because if the guys you buy are too big, then they won't behave themselves after you've bought them. Conversely, he doesn't buy things that are too small, because all those deals take too much effort, So things like the Siemens thing, Airborne, they bought before, a bunch of other people. I think they're often buying customers in the sense that you buy a consulting firm that has a series of customers. And they seem to be able to plug them in and keep everybody happy. I suppose a rising share price helps keep everybody happy. But you hear about other companies that buy businesses and then 6 months later they're having a fight with the people that they sold the business from or to. So these guys seem to be able to do that integration in a very effective way. I admit, you know, always with these stories, there is a danger that the market has fallen in love with them to such an extent that they're awaiting disappointment. But so far, so good. And the scale of the business is still relatively modest.
So hot or not, EOH?
Yeah, I like it. I think it's something that's certainly got more space to go. It's on a nice roll. It's in a good space. Good management team. Well incentivized. I think it's hot.
So Craig, hot or not on EOH for you?
Yeah, look, I think historically there's no argument that it's hot. I'm just worried about the working capital changes, increase in liabilities. So from that point of view, I'm going to say it's very speculative. I'd like to see the results, which are imminent. I'm going to presentation on the 13th next week, Thursday, so I'm going to say not hot for now.